Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's webinar on the theme that is very important, audit evidence and external confirmations. As we all are aware that both the topics are very relevant and very important in 500 series of standards on auditing. So first one is the audit evidence, and relating to that, that is the external confirmations. And in order to tackle these two very important standards and these two very important topics, we are having with us very learned speaker, CA Mayank Chawla ji. So on behalf of AASB of ICI, I extend my warm welcome to you, Mayank ji. Welcome to you for
Thank you
this
so much.
webinar. We are having with us one more learned speaker as well as moderator for today. And he has already spoken for various webinars, CA Utsav Dogra ji. I also welcome Utsav ji on this AASB platform. Welcome to you, Utsav ji, for this today's learning session for all our members at large. So without wasting much more time, I request Utsav Dogra ji to please start the proceedings of the webinar and give his opening remarks as well as about the, as he's already a speaker at our various forums. So I request Utsav ji to please start the proceedings of today's webinar, followed by the main sir's presentation. Over to you, Utsav ji, please.
Namaskar and a very good evening, everyone. I thank the AASB committee for inviting me once again for this moderation. Today, the session is on SA 500 and 505, audit evidences and external confirmation. We have CA Mayank Chawla with us. He's a very learned speaker and a fellow chartered accountant with us. I believe that he's going to take us through the intricacies of how the essays should be adhered to in our day-to-day auditing life. It's very important. As far as audit evidence is concerned, nowadays what I see for the chartered accountant, since the regulation has become very stringent and CAs are being gripped from their neck for any kind of audit that we do, these two essays become really very relevant and very important for us. Evidence needs to be there with us. It needs to be collected, maintained, and kept in stores. It's a safeguard to you. I would not go much into the details. I would like to introduce the speaker for the day today. We have CA Mayank Chawla with us. Mayank is a member of Chartered Accountant Institute, qualified in the year 2016 with a whooping rank of rank 40 across India. In addition to his bachelor's degree from University of Delhi, he also earned a diploma in information system audit from ICI. He has a 5-year prior working experience with the Big Fours. He has served at the managerial position and currently working as a practicing chartered accountant. He has rich experience in serving in providing services like statutory audit, internal audit, virtual CFO to the corporate clients, Ind AS, IFRS implementation, internal financial control implementation. He has served to various manufacturing and service industries, including FMCG, information technology, real estate, sugar, and telecom. He has extensive experience in serving corporate groups from various diverse locations worldwide, like USA, UK, UAE, Germany, and Japan. And this was about Mayank Chawla. And I believe that in today's session, we are going to really learn something much insightful from him. So over to you, Mayank. Please take this session forward and get us through these two essays and enlighten us with your knowledge. Thank you.
Thank you so much, Utsav. I mean, such an energetic introduction from your side. I'm really pleased with that. Thank you so much to Anilji and ASB for giving me this opportunity to share my thoughts on the topic. As Utsav already highlighted, it has become really, really difficult for nowadays for us chartered accountants and for statutory auditors in particular to reduce the audit risk to an acceptable level, and it demands us to increase the quality of our audit to a certain extent where we are able to justify the responsibility that we have been given. In doing that, it is very important for us to have thorough understanding of what our statute and standards are saying. This is just a you could say effort from the side of the ASB and to make everyone aware of those standards, and in particular we as professionals do not get much time to brush up our knowledge, and these webinars are really important in my opinion because I also attend them a lot, And what I have felt is, we can learn something from everyone, and I'll just try to give a few things which I have seen in my life and try to give my remarks on the topic. So I'll just share my screen with you guys, and I hope you are able to see that. I hope my screen is visible.
Yes, please.
Okay. So we know the topic for the day. We'll begin with the audit evidence. As we all know, our opinions are based on the audit evidences that we obtain and the conclusions we draw on the basis of those audit evidences. We need to, before we can give our opinion, it is very important that we have everything very well documented. Documentation of the audit evidences is very important, but there may be certain circumstances where evidences may be in different diverse forms. So how do we make sure that we are able to demonstrate our work to the regulators becomes very, very important. The standard defines audit evidence in a very simple and you could say a logical manner, that it is an information which has been used in arriving at the conclusions on the basis of which auditor's opinion needs to be framed. Now, the word important here is information used. So during the course of audit, we may inquire a lot of people, and there might be a lot of information that we gather. Information which has been used for the opinion only needs to be documented and to be retained. There may be information which you acquire during the course of audit which may not be directly relevant for your audit, is not required to be retained. Then this, where do we get this information from? We get from the books of accounts. So books of accounts includes everything. So it includes your financial statements, your trial balance, the accounting system, the related records, the internal workings on the basis of which that accounting has been done. And we can obtain information from the other sources as well. So, through this, during the course of this session, we will understand what these other sources are. I know that many of us are already aware of these things. We are just trying to, brush those up. And maybe if there is any question in the middle, then obviously I have asked Utsav if he can interrupt me if you have any questions during the course of the session. So audit evidence has to be sufficient and appropriate. We all are aware of that. And appropriateness would mean that it has to be reliable and relevant for the audit. And the sufficiency and appropriateness has to be seen for each and every risk that is there, for each and every assertion that has been presented by the management in the financial statements. And also the evidence, sufficient and appropriate audit evidence has to be there at the balance sheet level or the financial statement level as a whole as well. So this is what audit evidence is. Now, how do we obtain these evidences? So there are three procedures that we do during the course of our audit, which help us obtain these evidences so that we can form an opinion. First are the risk assessment procedures. These are particularly covered by Standard on Auditing 315. So risk assessment procedures are generally what I have seen. I have had a lot of discussion with my colleagues, a lot of other practicing chartered accountants. And, generally, most of us are aware of two procedures for obtaining evidences, that is test of controls and substantive procedures. That has been the general understanding. But risk assessment procedures are very, very important when it comes to obtaining evidences. Can we only do risk assessment procedures and we can avoid test of controls and substantive procedures? The answer is no. But risk assessment procedures are the basis of the foundation on the basis of which we perform the test of controls and substantive procedures. What do we actually do in the risk assessment procedures? Will we obtain the understanding of the entity and their internal controls? How do we obtain that understanding? So we all know that, we need to understand the industry, we need to understand the business, but we need to understand the processes of the entity. When I say processes means we have to perform walkthroughs, and those walkthroughs have to be documented in a well planned manner, and those walkthroughs should demonstrate that the outcomes in the form of risks identified at the assertion level and at the financial statement level. And these walkthroughs are very important evidences which particularly demonstrate that the test of controls and substantive procedures that we perform are done on the basis of a risk-based approach, and the audit has to be done on a risk-based approach only. We can't do process-based audits, we have to do risk-based audits. So this is the reason why risk assessment procedures are of particular importance. So the evidences will be in the form of the risks that have been identified, and the identification should be in the form of the walkthroughs that we have done, and each and every document that we have examined during that walkthrough should be ideally retained by us to demonstrate that there was no lag while we were performing those walkthroughs. Then comes test of controls. So test of controls, we are all aware that now that, for the companies, for certain class of companies, it has become mandatory for the auditor to give opinion on the internal controls over financial reporting. While this test of controls would be mandatory for those organizations, because we can't give an opinion if we do not test the controls during the course of audit. One question comes to our mind is whether we can avoid these test of controls while auditing an entity to which internal control over financial reporting is not mandatory or is not applicable, I should say. The answer is they can be avoided, but in that case, substantive procedures have to be increased, and ultimately it will increase the work of the auditor. So economically as well, in a audit engagement, it is generally suggested that we should test controls, and on the basis of the controls only, we should result outcome of the control testing, we should perform the substantive procedures. Otherwise, it may lead to over testing, and it may not be very productive for us as the auditors. Substantive procedures, we all are aware what substantive procedures are. We are performing procedures directly testing the assertions for all the account balances and class of transactions and disclosures to ensure that they are not materially misstated. So substantive procedures are targeted as ensuring that material misstatement is not there. So these are the three broad categories of procedures that are done by the auditor, and these are the basis we obtain the evidences. Now, there are certain techniques which we generally use during the course of performing these procedures, which we'll discuss now. We are all aware of these procedures. We will just run through these and just recall and relate, in fact, practically where we actually do these things and perform these procedures. So these are the techniques which we use. Number one, inspection. So inspection of documents is necessary in all the three procedures, be it risk assessment procedures or control testing or the substantive procedures. While we are doing the walkthrough, we have to view documents and need to understand the entire audit trail. So that's why inspection is a very important part of our audit. Secondly, when it comes to test of controls, since we generally see, we need to understand how the control procedures are performed, which are generally evidenced in the form of approvals or signatures. We can know about them only by inspecting those documents. And again, the substantive procedures, while performing test of details, we need to inspect. So a basic example that I have mentioned over is reviewing the invoices to verify the recorded sales. So we do vouching of the sales, And when we do the vouching, we inspect the sale invoices and trace it from the other source documents. Second is observation. Again, observation is very important because it is generally you could say this procedure is done by the auditor himself, and that's why the importance increases a lot. So observation is a very basic thing that is done in generally physical verifications, be it a physical verification of inventory, and in some circumstances there may be a physical verification of the fixed assets as well. Then is the external confirmations. We will cover this topic in detail later on, but as we all know, external confirmation is a confirmation taken directly by the auditor from the third parties to confirm the balances that are coming in the books of accounts of the client. Recalculation. Recalculation is very important when we want to test the arithmetical accuracy of anything. So arithmetical accuracy may be of anything which has been done by either by the system or which has been done by the client in using a Excel spreadsheet. So if a basic example is recomputation of the depreciation that we generally do, or the recalculation of the interest income or the interest expenses. That is how we perform recalculation. Reperformance. Reperformance, again, it is somewhat different from recalculation because recalculation mainly focus on arithmetical accuracy. Reperformance may be of something which does not involve calculations. Like for example, while there is a stock count happening, we can go and reperform whatever the client has done and reperform the entire inventory count procedure for a particular lot of inventory. So that means if it doesn't involve any arithmetical accuracy, but still reperformance has been done. So something that already client has done and we are doing again, that is what reperformance is. Then analytical procedures. I mean, there is a separate standard for analytical procedures, which defines analytical procedures in two parts. One is the analytical procedures which are done at the financial statement level, and the other are the substantive analytical procedures. I mean, that's a topic for some other day, but in substance, we know analytical procedures means analyzing the financial and non-financial data and trying to create a correlation between the two, and ultimately, which will support the other evidences. Inquiry. We all are aware a lot of things are required to be inquired, and inquiry with the management is one of the most important part because there are a lot of things that are not very well documented in organization, especially where the size is small. A lot of things are not well documented. So inquiry is a very important factor in such circumstances. And however, inquiry in itself may not be able to give the evidence, the kind of evidence that we want. The reliability of the inquiry may not be there because it is not very well documented. So generally, inquiry supports the other evidences which are there. So these are the techniques which we generally use while performing our audit. And when do we perform these activities? During all the three steps. Be it we are doing the risk assessment, performing the walkthroughs, or we are testing the controls, and we are doing substantive procedures. There are three things that out of these seven which we don't do at the risk assessment level. I hope you are able to understand this factor, that external confirmation, the recalculation part, or the reperformance part. Generally, these are related to our test of controls and substantive procedures. Because while we are doing the walkthrough, we inspect things, we observe things, we analytically analyze, and we inquire. But generally, we are not reperforming the activities, or we are not sending external confirmation to the parties at the risk assessment. Rest of the techniques are generally used at both substantive and the test of controls. Now that we have just freshened up about the techniques, let's move forward to understand the reliability. So we all know that evidences have to be sufficient and appropriate. Now the point is, how do we ensure that an evidence is sufficient? So sufficient, or I should say, an evidence is appropriate. Appropriateness is bifurcated into two parts. One is reliability and one is relevance. What is reliability? So reliability means the evidence I have got is qualitatively reliable enough, and it is somewhat independent of the transaction, or of the management rather, and we can form an opinion on the basis of that evidence. So that is why the more independent the evidence is of the organization, the better the reliability is. So this is the hierarchy which you can see on my screen, that what kind of evidences are more reliable in comparison to the others. While I say that, it doesn't mean that the evidences, I mean, this particular hierarchy is in correlation to each other. That does not necessarily mean that the evidences which are at the bottom of the hierarchy are not reliable, but comparatively, they are less reliable to the other sources of evidences. And while the auditor is responsible to ensure that more persuasive evidences are obtained, it may not be possible in each and every case to follow this hierarchy. So it is very important to practically understand whether these kind of evidences are available or not. So the first level of hierarchy is direct and personal knowledge. That means anything and everything which is done by the auditor himself is at number one. So if we visit the client and we conduct the physical verification on a test check basis, and we observe the count, or we reperform the count, all these are at number one place. So anything and everything which we do by ourselves as an auditor, that will be number one in the hierarchy. Then comes the external evidences. The direct confirmations that we obtain from the third parties are second on the hierarchy list. Third is the internal evidences, anything being generated internally. So while we do audit, most of the things that are available to us comes into this category number 3, that are the internal evidences. So maybe verification and reconciliation of sale invoices from the gate outward register. I mean, this is a very basic example. While we test sales, so gate outward register is maintained at the factory gate when goods are dispatched from the factory. So the reconciliation of the sale invoice, which is also generated by the entity, with their another internal record, that is the gate outward register, gives us an evidence that okay, these transactions have actually occurred and the dispatches have actually been made. Again, this evidence is good, but in case we can get a confirmation from a third party about the sales being made or the debtor balance, that in turn would give more persuasive evidence than just reconciling the internal records. Then the last on the list is oral evidences, which are generally known as corroborative evidences. Corroborative means they support the other set of evidences that we have obtained. They in themselves may not be persuasive enough to form an opinion, or they may not be conclusive enough, but they help the other evidences, because through inquiry only we discover new things about a client. That's why inquiry plays a very, very important role in understanding the aspects which may not be very well documented. Because as we all know, frauds generally happen in a less documented manner, and oral inquiries play a very important role in that case. So this is the reliability leg of the appropriateness, that what kind of evidences are more reliable. Now, let's move forward and understand how relevance is related to different aspects of audit. So the literature meaning of relevant means that something is, the something is directly proportional or directly related to what we are doing, right? So when it comes to appropriateness, relevancy of the audit evidence becomes very important. And when we say relevant, relevancy may be related to multiple factors. So a basic important thing is that it should be relevant to the risk or the assertion that we are catering to. For example, uh, you know we perform physical verification of inventory. where we are trying to obtain an evidence that the inventory is existing as on the date of the count. However, just by counting that inventory, we can't get the evidence that the inventory has been valued correctly, because valuation is a separate matter where we have to verify the compliance of the accounting standards as well. The cost allocation techniques are as per the FRF or not. Because ultimately the valuation of inventory is made from two parts. One is the quantity, and the second part is the rate. And when you multiply the quantity with the rate, then only you get the value. So relevance may be different with different assertions. So one set of evidence may not be applicable to all the assertions. So that is why after we perform the risk assessment procedures, it is very important to list down the risk at the assertion level and map the procedures to those risk and assertion, so that the evidences which are in turn obtained by performing those procedures can directly be demonstrated to the regulators to prove that our audit was done in the manner which was supposed to be done as specified by the standard on auditing. Then the relevance may be on the basis of type of audit procedures. Like I told right now, there are three types of procedures: risk assessment, test of controls, and substantive. So in test of controls, we may just verify that whether the approval matrices are being followed, or whether necessary approval activities are happening at the different levels of the process or not. However, the substantive procedures would in turn require us to test the details of those information involved in that process. So by just checking the approval, we may be able to comment upon that the controls are operating effectively or not. But we can't say that the financial statements have been are free from material misstatement, or the financial statements are presenting true and fair view. We'll not be able to comment on that just by doing the control testing. So that's why the evidences will be different for control testing and the substantive procedures. Then timeliness of the evidences. So every audit is done with the pre-decided timeline. I mean, there are regulatory requirements as well where we are supposed to close our audit. So timeliness of evidence becomes very important. Timeliness may be related to the inventory physical verification as well, because there are certain circumstances, as we had already seen at the time of COVID, that inventory verification was not practically possible, or it may have been done at a later stage because there was a lockdown initially from March to May. So if those counts are not done on time, like if they don't happen nearby the reporting date, then additional procedures may be required, and somewhere it reduces the relevance of the evidence that we obtain. So that's why it is important to perform the procedures on a timely basis, as and when the information is available, and as and when it can provide the most persuasive evidence. So now we understand what appropriateness is. The evidence has to be reliable. There is a hierarchy over there, which tells one type of evidence is more reliable than the other. But that doesn't mean that is the only way to go about the audit. There may be circumstances where one type of hierarchy may not be available. Secondly, we have understood the importance of relevance, which may be in relation to the assertion or the type of procedure we are doing, or the timeliness, and it has to be construed differently with these three different aspects. Then how do we decide that whatever evidences we have got are sufficient? Now, before forming an opinion, we need to understand that what kind of risk are there, right, through the risk assessment procedures. So that is why when we start our audit, the first thing that we do while performing the audit is risk assessment. Then we move forward with the responses. So that is why the first factor will be risk of material misstatement. So higher the risk, the more samples will have to be tested, and with more sample being tested, and in case there is no deficiency or the observation in those samples, we can possibly say that uh, there is no material misstatement that exists, and we can document it that way. So the evidences or the samples would go up if risk is high, they will go down if the risk is low. Effectiveness of internal controls. So while performing the substantive procedures, if we conclude that our controls are effective, we will have to perform less testing. We can go with less testing unless until we are testing for a significant risk. And then in turn, the evidences, that's why are dependent upon internal controls as well. Because if internal controls are not performing well, then the number of samples would go up and we will have to obtain more evidences by testing more samples. Then the quantum would be different when it comes to the nature of evidence as well. For example, while auditing an account balance like trade receivables, if we get a direct confirmation from the third party, then it may not be necessary for us to perform alternate procedures. So the external evidence would be more reliable. That's why we are not required to perform alternate procedures, which are internal evidences in the nature. Then size, volume, and complexity of the business. If the company size is big, so if a company's turnover is 10 crores and it has, for example, 1,000 invoices, the sample size would be different. For example, if the company's turnover is 1,000 crores and the number of invoices are 1 lakh, again, it will be very difficult to obtain those evidences. So the quantity has to be different considering the size, nature, and size of the business. So more relevant samples may be required, and testing has to be done accordingly. We may be testing high value invoices more in a large organization to cover the majority of the population, whereas where invoices are a small amount, we may find a more analytical approach to obtain the evidences where we are performing substantive analytical procedures and recomputing the sale values. Then type of audit procedure is important. Why? Again, sufficiency of audit evidence would depend upon what kind of audit procedure we are doing. If we are doing inspection, observation, we are doing it ourselves. So again, they are more reliable, and then we would require less evidences in that. But again, if we are doing only inquiry, then inquiry may not be able to give us the kind of evidence that we need for finding on the financial statements true and fair view. So that's why other evidences may be required to support that inquiry. Timing of audit procedure. Again, the timing, the example that I gave for inventory. So inventory count happening at the year end is sufficient to test the existence of inventory as at the balance sheet date. But if it is done at a different time, for example, in April or May, it will not be able to give the sufficient evidence, and we will have to perform alternate procedures for that. Now, during the course of audit, we obtain a lot of information from the management. So the majority of the things that we get is from the management side or management of the entity. And most of the information that we document and retain as our work papers are the management sheets. But it is very important to understand that before we are able to retain those sheets, there is certain amount of working that is to be done by us, because we can't just rely upon anything and everything which has been shared by the management. So how do we use that as an audit evidence? So any information which has been provided by the entity has to be tested before we can retain it as an audit evidence. First of all, we need to understand how the information has been prepared. So for example, we are testing the sales. So the company is involved in sale of goods, which generally, does trading. And we know that we are auditing a particular revenue of 1,000 crores. Now that 1,000 crores is backed by sale invoices, because when we do a sale of goods, then we are supposed to raise the invoice to the party. So the first step that we will do, we will reconcile the trial balance with the financials and see whether the information is flowing from the trial balance correctly or not. Then we will try to obtain a sale invoice level list or the sale register to reconcile the sale register with the trial balance, that whether the information is flowing from the from the invoice to the trial balance correctly or not. Now, when we obtain that sale register, how do we know that the information that is there in the sale register is correct or not? Because the sale register has been obtained from the system. It may have happened that due to certain errors or because of certain manual adjustments after a generation of the sale register by the management or any of the employees of the company, that has not been distorted, and numbers which are actually coming in the financial statements are not reconciling with the trial balance or the books of accounts. So that it becomes really important to understand how that information is created, and then only we'll be able to test it. So continuing with my example, we need to test the general IT controls, how these reports are being prepared or are being generated from the system. With general IT controls, we mean we need to test what are the controls over the database, what are the controls over the operating system, what are the controls over the ERP, what they have implemented. So if these things are well in place, then we know that it is very difficult to edit the data from the backend or from anywhere, and there are no loopholes within the system itself, IT system itself, that the data could be tampered through anyone. And why do we need to check? Because if we are going to rely on the system generated report, we need to make sure that the uh, penetration to the system is not easy, or the controls around it are robust, and that this report cannot be tampered with easily. That is why general IT controls needs to be tested if we are using a system generated report. Then there may be circumstances that some kind of reports are being prepared manually. For example, generally, fixed assets registers are maintained manually by the clients, and so it becomes very important whether those fixed assets registers are being reviewed or not. If they are not being reviewed properly, then there are chances that it may have more errors, and we may have to test more samples to rely on that fixed asset register. So that is why testing of controls over the information preparation becomes very important. And the last and the most important thing is to verify the completeness and accuracy of the source data. So coming back to my initial example, there is a sale of 1000 crore in the P&L. It is reconciling with the trial balance. Now we have obtained the sales register. Before we can say that this sale is accurately recorded. So the risk over here is the sale has been recorded an incorrect amount. The assertion we are catering to is accuracy. Now, before saying that it has been accurately recorded, I should check the invoices and compare the invoices amount with the sale register. And let us assume that both are reconciling. But again, a question would arise in our mind. Isn't a sale invoice also an information that has been produced by the entity? So how do we rely on that sale invoice itself? It may happen that actually the quantity which has been dispatched in a particular sale invoice, say 1000 units, is actually wrong, and it should have been 2000 units because the actual quantity dispatched is 2000 units. So in such a case, again, the question comes, we have to test the sale invoice as well, whether that is correct or not. Because if that is incorrect, the sale being transferred to the sale register will be incorrect. And ultimately, whatever is going to the trial balance and the financial statements will be incorrect. So from a separate source, we need to check the quantity and the rate. So we will check the quantity from its source. For example, we will check from the sale outward register. We can check from the lorry receipt if the transporter is of the company. And then the rate can be checked from the sale order, or I should say the purchase order which has been given by the customer, or the agreement with the customer. Or in case it is more of a retail industry, then they have a pre-approved rate catalogs from where it can be verified. So once we verify that quantity and rate on sample invoices and trace it from its source data, from where these quantity and rate are coming, because quantity is coming from the actual dispatch and rate is coming from the pre-approved rates. So once we verify that, then we can only say that the amount flowing in the financial statements is accurate, the trial balance is accurate, the sale register is accurate, and the invoice is accurate. So that is where tracing to the source data becomes very important. But how do we ensure the completeness? So for the completeness, we have to obtain an independent population, and we have to reverse trace from the independent population whether there are any unrecorded invoices in the sales register which may have been prepared manually. For that, we can obtain an independent population, for example, a sale outward register, and reverse trace whether all the sale invoices have been booked and they are being reflected in the sale register or not. And then only we'll be able to use that sale register for our own purposes. So this is how we need to test the information which has been produced by the entity before we can retain it as an audit evidence. Generally, I have seen a practice which auditors do. Again, some of my colleagues, I have seen them, and we had a lengthy discussion regarding it. Some of us retain the tally data or the accounting records altogether with us. And to be honest, that is not the best kind of practice that we should follow, because we do our audits on a sample basis, and there is no 100% assurance that we are giving. There is no absolute assurance. So it is better that we retain reports and files rather than the tally data itself, because it may not be used as an audit evidence because we have not tested the tally data in entirety, and in fact it increases our risk only. So it is better that we retain the reports from the system which we have used and tested as well, rather than retaining the entire tele data, because it will be very risky while if any kind of regulator comes and we have to go through that process. Now let us discuss about the management expert. Management experts are involved during the course of audit. One common thing that we see is involvement of actuary or a legal counsel as well. So these are the two most common things that we see when it comes to a management expert. So how we are documenting about the usage of their work is very important. Just by obtaining the actuarial valuation report and tracing it with the financial statements is not the adequate procedure. We need to document a few things about that management expert. So before relying on the work, we need to understand whether that particular expert is competent enough or has the capabilities or not. So it has to be a registered actuary. Then only we can use their report. Then we need to understand the scope. What their scope says. Are there any limitations, and and we need to actually understand on the objectivity as well, because if in case of high value litigations, if the management is involving a related party or related person, then it may raise doubts over the reliability of the opinion that they have given. So that is why it is important to be objective. Now it is very important to assess the appropriateness of experts' methods and assumptions. So as we all know, when the actuarial valuation is done, there are certain assumptions that are taken by the actuary. For example, the discounting rate. So the discounting rate, the basis of the discounting rate has to be checked. They must have taken the attrition rate as well. So in certain circumstances, the attrition rate is given by the company only. So the assumptions which have been taken by the expert needs to be re-verified. And the last is the completeness and accuracy of the data used by the expert. So data is given by the company. So whatever data the company has given, we need to trace it back to the source data. So for example, if we talk about the actuarial valuation, for suppose the actuarial valuation is being done for the valuation of gratuity, we can take the sheets that has been shared with the actuary. We can reconcile the totals of whatever the data is coming in the actuarial report with the sheet that the company has given. And if the amount is reconciling, that means the report has been used correctly by the actuary. Then we can trace that data which has been given with the payroll sheets, which we have already audited, and to make sure that the data which has been given is complete and accurate. so that we can make sure that no employee is missing in that report. Because if any of the employees are missing, that the gratuity valuation would be done incorrectly and it would be undervalued. So that is why completeness and accuracy of data needs to be verified. And it is very important to document it in the form of an Excel work paper, what we have performed, what we have done, and how we have reconciled it with the payroll sheet and the actual report. When it comes to management expert, we may have to involve our own expert as well in circumstances which involve high risk, for example, the litigations, and which is generally covered by a separate standard. But it is very important that to conclude that whether we are able to understand and evaluate the assumptions taken by the expert in such cases or not, because management experts may take very aggressive view in the favor of the company because they are not independent enough, and it may require us to involve our own expert to verify their work. I mean, the involvement of a legal counsel is a very, you could say, basic example, or I would say most often it is required in these cases. So just to conclude, before we use the work of the management expert, we need to document in these four categories, and these 4 points are required to be taken care of before we can do that. So this is what we had in the audit evidence. So we discussed about sufficiency and appropriateness of the audit evidence. We discussed what are the factors which are there to ensure that the evidence is reliable and the evidence is relevant enough to be used in audit evidence. How we can make sure that our audit procedures give us sufficient evidences, and how we can increase the sample size in case the risk is higher, or if the controls are not operating effectively, and how do we use the information that has been provided by the entity as an audit evidence. And finally, we understood about the management experts work.
Mayank, I would like to interrupt you here. We have a live question with us.
Okay, thank you, Utsav, for interrupting.
So, is the confirmation obtained through email which do not have a signature can be treated as a valid audit evidence to frame an audit opinion? This is a live question from the audience.
See, I mean, I have a very conservative opinion when it comes to the external confirmations. I am of the opinion that confirmations should be sent in an offline manner. Why offline manner? See, the kind of cyber frauds that are happening in today's world, it is very difficult to actually, conclude that whatever confirmation that we have obtained is from the correct source or not. So, and rather take a risk on that, I would suggest that we take offline confirmations sent through couriers and expect them. What we can do is when we send a reminder for those confirmations, we can ask them to send it through the attached copy of the attached signed copy through the email, and also revert us back manually as well. But only taking confirmations through email may not be suggested, because again, it is a risky stuff.
All right, thank you. So we have another question regarding external confirmation. So they're asking if the external confirmation is applicable under which circumstances other than debtors, creditors, and deposits.
So we will cover that in our session ahead. I mean, yeah. So I mean, that is something that we are going to cover in detail.
Yeah, well, there is another set of question which says that which to rely, because external can be managed by the auditee. I don't know which of the question does it relates to, but I believe that he is willing to ask that if the external confirmation can be managed by the auditee, how we place a reliance upon.
So see, it depends. I mean, what I can understand is there is a close relationship between the parties. That is what the person is trying to communicate, that there might be circumstances where they are related parties, or there is a close connection. Then in such a case, we can use other procedures as well. I mean, for example, if we are selling to a related party, then we have to test about the arm's length as well. It is not just that obtain the confirmation and that is enough. The arm's length is also required to be tested. And if the transaction is not at an arm's length, then it gives an alarming sign, and we have to perform the other procedures as well. So it depends upon the circumstances. If you notice instances that that the objectivity may be hampered of that external confirmation itself, or it is not reliable, then the procedures need to be amended, and we need to extend our procedures to other categories and obtain other levels of evidences to corroborate with that confirmation.
All right, Mike. I believe you need to continue with your presentation.
So
Thank you.
I would like to touch upon SA 501 as well, because again it specifies certain aspects which are particularly related to some of the items in the financial statements. I'll just touch upon that. One of them is really important, that is inventory. So these are the three things that are covered by the standard. One is existence and the condition of the inventory. How do we obtain audit evidence regarding that? Second is completeness of litigation and claims. And the last one is presentation and disclosure of the segment information. So when it comes to inventory, any manufacturing or trading industry has inventory, and it is utmost important for us while we are giving an opinion on the financial statement that we physically attend the inventory counts. Again, I have seen a practice that not all the auditors go and do the physical verification, and they generally perform alternate procedures to obtain assurance over the inventory balance which is coming at the financial year end. But that is not the ideal approach, and it may be questioned, because inventory is the only thing in the P&L which can be manipulated very easily. You increase the quantity or decrease the quantity and your profit changes, right? So that is why it is very important to attend the inventory count. And if we are not attending the inventory count, it may not be possible for an auditor to give the assurance about the the existence of the inventory as on the balance sheet date. Now we have responsibility to disclose that in the schedule 3 as well. I mean, we are disclosing about any differences between the data that has been provided by the company to the banks, and if there are any difference in data provided to banks and the books of accounts. Again, the responsibility has been increased. Most of the manipulations happen because of the working capital limits only. So it is better that we plan for the inventory count if the inventory balance is material as on the balance sheet date. Okay, now suppose we have planned for an inventory count, and we go to the site, and we perform our count. What do we need to do first? So first of all, we need to evaluate the management controls over the inventory count. What can be the controls? So it may happen that when you go for a count, it is a working day. And on a working day, generally the inward and outward movement of inventory keeps on happening. So we need to understand how the management has controlled those movements, so that when you and your counting, you are able to bifurcate that movement of the day. Because in case there is no control over the movement, and if that movement is not being made through a separate area, or the goods are not kept aside separately, then you may not get reliability over the count that has been formed. So that is why controlling becomes very important. One of the controls may be implementation of bin cards. If bin cards are there and the inward and outward movement is being recorded, then it gives an assurance, okay, that inventory is being managed on a regular course of business, and whatever the physical count is reconciling with the bin card, then it gives a comfort that the controls are fine. Then we need to observe what management is doing, or I should say the staff of the management is doing. One basic control that should be there is that the inventory count is being done not just by the store people, but an independent supervisory guy should be there, who should be independent of the store or the site. Because they are the ones who are maintaining the inventory, and if they are the ones who are counting it, then obviously there is a segregation of duties conflict. Ideally, a accounts person or a separate department, cross departmentalization should be done, and somebody from different departments should perform that count. So while we observe the count, we need to perform certain inspection of the inventory as well, and we need to document it very clearly that what we have counted and what are the results of the count. So I'll just show one work paper in which will help you understand how we can maintain the samples that we have tested. So this is an Excel file which can be used for the purpose of documenting the inventory count. So while we do the inventory count, we perform procedures for two things. One is for the existence, that is the inventory which is already there at the site, and we are just verifying from our books to the site and correlating with the books of accounts. So whatever samples we select, we need to list it down. So this is the item description. There will be item ID. Quantity per pre-count listing means the quantity which is as per the books of accounts. Unit of measurement. Then audit team quantity counted. That when you perform the recount, what did you count? Client quantity counted. What has been counted by the client? Reconciled quantity. In case there are any of the differences between the counting that you have done and the books of accounts, and reconciliation would be required. Final recorded quantity and the variance. How much is the variance between the physical count and the books? Why this variance is important? See, if you count for 25 items or 50 items and they amount to 30 to 40% of the population, and for example, there is a difference of 100 rupees in that, then you could extrapolate and evaluate, okay, if there is a 100 rupees different in 40%, then that means if I had counted 100%, the difference would have been of 250 rupees. It will help you to evaluate your risk, whether that 250 rupees difference would have affected your opinion on the existence of the inventory or not. That is why evaluating the variance between your count and the books of accounts is very important, because that will help you conclude that whatever you have counted or whatever the outcome of the this procedure is accurate, and it is not resulting in it is not depicting a material misstatement that might have been there. In case there are huge differences, for example, if that extrapolated difference is more than what you could accommodate, then we will have to extend our sample size, because we need to either confirm that yes, there are material misstatements, or we need to certainly make sure that those material misstatements are not there. So this is what we do for the existence. Other than this, this is the place where we document the additional selections if necessary. That is why it has been written if necessary. Then we move to completeness. We need to select random samples from the floor as well. We just can't count one way, because there might have been circumstances that some of the inventory is present at the site but is not recorded in the books. That's why reverse counting is also important. Samples needs to be selected on that as well, and we'll document in a similar manner. Then it is very important to randomly open certain samples as well to understand about their state or the condition. We may have to check the weights, because in certain industries, for example, if somebody is counting a stock of Ashirwad Atta, so it has a pre-counted, the weight has been already been defined on the packaging, and it is assumed that every package is, for example, 5 kg. But before we can conclude on that, certain amount of samples needs to be tested on a weigh scale to confirm that they are actually of 5 kgs. We can't just rely on that, okay, every package is of 5 kg because it has been written on. Certain samples needs to be tested for that as well. And if there are differences, we need to make sure that we either extend our procedures to actually conclude that that was an anomaly and it is not present everywhere. Then in case of any observation, we can document this. With the inventory count, cutoff procedures become very important. What is a cutoff? So for example, we have taken a cutoff of 31st of March. That 31st March is for example, inventory count date. Now we generally take the inventory of 31st March and in the financial statements. So while we are counting, that inventory may not be final, and there might have been movements happening while we are counting the inventory as well. So it becomes very important to take the cutoff that what are the invoices which have come after the count has been done. Or for suppose if we were counting on 1st of April or 2nd of April per se, because it can happen. It may happen that counting is happening on a Sunday and by default the Sunday is coming on on 2nd of April. So then we have to make sure that any of the transactions that had happened on 1st and 2nd are excluded to compute the inventory of 31st March. That's why cutoff is very important to account for the invoices, or you could say the purchase or the sale or even the interbranch movement, whatever movement is happening inward or outward is considered while we verify the inventory. So this is how we can again document our cutoff. That what are the pre-count, what were the first five and the last, what were the last five in and outs, and after count, what are the last five in and out. It will help us understand what kind of movements have happened during the count and how we can account it for while we conclude on our physical verification procedures. Now it may happen, that the inventory count is happening way beyond the 31st March or way before 31st March has come. For example, on 15th of March or 15th of April. It may be due to multiple reasons. Maybe it has happened at the time of COVID. I mean, it is very rare actually. That is why it is the last resort action if the physical verification cannot happen. But if the physical verification is happening at a very later date or very early date from the reporting date, then other procedures are required. So what needs to be done is, if we count on 15th of April, then again, the physical count reports that I have shown right now, or the documentation I have shown, we need to go there, count for the 15th of April, and we will count on the basis of 15th April stock of the books of accounts only. So whatever is coming in the books of accounts of the entity on 15th of April, we will trace it physically and we will trace it, we will select some samples from the floor and trace it back, and we will ensure that the listing of 15th April is complete and accurate. But we need to give an opinion on 31st March. Then we need to trace the purchase and sales from 1st to 15 on a sample basis. So what we will do, we will obtain a inventory movement register, that how the movement has happened. Then we have to test that inventory movement register, that whatever the purchase and sale has happened have been accounted for in that register. And once we do that, we will be able to backtrace the inventory of 31st of March. After eliminating purchase and sale of 1st April to 15th March, we can trace it back to 31st March and reconcile that balance which has been arrived with the balance that is coming in the books of accounts. So this is generally called a roll back procedure. So if the count had happened on 15th of March, then we would have performed roll forward procedure. So we would have counted on 15th of March, and whatever the differences have happened or the transactions have happened in from 16 to 31st, we would have accounted for and then compared with the books of accounts in terms of the quantity. What happens if the inventory is lying at a third party location? There are certain circumstances where the company gives a lot of its products for job work, and the procurement is done by the company, but the manufacturing is done by the job workers. So there might be circumstances material inventory is lying at the third party location, and if that is the case, then it is very important to obtain evidence over that inventory. So first thing that can be done is the direct confirmation to the third party, which would be a very logical way of doing it. Then we can ask for the ledgers of that third party, how they are maintaining our ledger, and we can reconcile our outward with their inward, and how whether inward outward movement is absolutely reconciling or not. So however, if there are circumstances with the inventory so huge that it is required to physically verify, Either we can ask the service auditor, service auditor means the auditor of that entity, to give us the report, or in rare circumstances, we may decide to go for the count ourselves if the inventory is very huge. But in most of the circumstances, what I have seen, the direct confirmation is generally enough because the third party inventory is generally rotating and it is not very huge at the financial event, but it may happen. And if that is the case, then we may have to plan for physical count at their location as well, either directly or through the service auditors, through the involvement of service auditors. Now, supposingly, we are not able to count. I mean, it is impracticable. So impracticable, we need to understand, right? Impracticable means uh, it is not as a matter of neglect. It is a matter of impracticability, which happened at the time of COVID. So we need to perform alternate procedures. Alternate procedures are would be like we had counted in the last year. We would take that report. We would see that whatever the transaction, purchase, sale, and everything which has happened has been accounted for in the inventory movement report to ensure that no manual entries have been posted in the inventory ledger, and whether closing balance is reconciling with the books of accounts or not. But uh, does that give us the level of assurance that we are looking for? Ideally not. So in most of the circumstances, if the physical count is not happening and the inventory is material, we are supposed to modify our. However, if the inventory is not material and it is it is not complex and it's a very simple business, we might be able to obtain sufficient and appropriate audit evidences, and it may not have any impact on report. That is a very rare circumstance if the inventory amount is material. So that is why it is very important to count the inventory. So this is what the standard said about the inventory, physical verification of inventory, and what is required to be done to obtain evidences specifically for the inventory's existence and condition. The second thing that it covers is about the litigation. For litigation and claims, again, it is a very subjective matter. Every company has litigation, the kind of regulatory environment we have. The litigations are ongoing. So, how do we get to know about whether any litigation is going on or not? Again, we can inquire, we can ask the management. But as we know, the companies, they are not very keen in disclosing all the information. So we can read the minutes of the meeting and the other minutes that are being prepared. What generally happens is these minutes are being prepared at the large organization, but when it comes to mid-size or small-size organizations, they are not very well organized or well documented. And these minutes are these meetings are happening on paper, or the minutes are not maintained very well. So in such a cases, review of legal expenses is a very important procedure that we can do. So whatever expenses are happening and whatever expenses have been booked in the books of accounts, we can check them on a sample basis and understand what are the reasons of those expenses, and they may indicate a potential litigation which has not been disclosed by the management. And that is how we can identify any undisclosed litigation. The last and the most important thing is communicating with the legal counsel to understand about whether there are litigations which are either maybe undisclosed, or there are litigation, and if ongoing litigations are there, what are the possibilities of the company either winning or losing that litigation on the basis of the you could say the case laws which are already there, or the facts of the case. How confident is the legal counsel that the result will be in the favor or against of the organization? Again, generally, this is an area I told earlier as well, where we might be required to involve our expert if the litigations are material and they are of huge amount. And just by taking the external confirmation from the legal counsel may not be enough in this case. That is why we might have to move upward in the hierarchy level and directly obtain the evidences with the help of a auditor's expert. Then the last one covered by the standard is segment information. Okay, so segment information is provided in the financial statements if the company is dealing in multiple segments. For example, like ITC. I mean, they're dealing in tobacco, they're dealing in FMCG, paperboard and all that stuff. So whenever you have time, you can open the financial and see whether a segment is applicable. It may not be the case with each and every organization. However, if segment is applicable for the organization that you are auditing, we are not supposed to test each and every sample and document that this sample belongs to that particular segment. That is not the case. We need to ensure the accuracy and completeness of the financial statement level. That means there has to be a criteria on the basis of which the segment information is being prepared, and that has to be reconciled with the financial statements as a whole. So it should not be the case that if there are three segments A, B, and C, and there is a profit of 100 rupees in each, and the 300 rupees profit in the segment information is not reconciling with the financial statement, and the financial statement is depicting profit of 350. That should not be the case. So that is what we need to verify. Secondly, what is the criteria? How we have allocated the sale, purchase, and all the transaction between A, B, and C. Generally, how it is done, branch accounting is done, or separate books of accounts are maintained for all the segments. In SAP, generally we have separate company codes on the basis of which this information is prepared. Again, there are certain things which are not allocable to any of the segment, like HO expenses. So a reasonable basis has to be there. So the basis, the methods what have been used by the management needs to be verified in line with the applicable accounting standard or the Ind AS, and then only we'll be able to conclude whether the segment information is in compliance with the financial reporting framework or not. That is what we are supposed to do. Understand the methods being used and ensure that they are in line with the accounting standards. And the last, we need to perform analytical procedures. Procedures that we perform at the financial statement level, similar we can perform at the segment level. For example, segment A's last year's sale was 100 rupees. Current year sale has increased to 120 rupees. The 20 rupees has increased because the total quantity sold has increased by 2 units, and the rate of per unit is 20 rupees. That's why there has been an increase of 20 rupees sale. At each line item, if we can conclude on that and after the audit, then that is enough for us. We need not test 120 rupees again, that okay, this 120 rupees of sale belongs to this segment. So this is what it says about segment information. So we have covered 501 as well. I thought it is necessary just to go through that because inventory was the most important factor that I wanted to cover, and before I could move to the external confirmations. And I hope we have been able to gather a basic understanding or somewhat freshen our concepts up, what is being said by those standards. Now I'll move to 505, that is external confirmations. External confirmation, as we all know, it is an evidence obtained as a direct written response to the auditor from a third party. So we send it to the third party. And directly, the word very important here is the direct written response. It has to be direct, right? It should not be through a client. It should be sent by us and not anyone else, from a third party in paper form or by electronic or other medium. That is what the standard says. What kind of confirmations are there? There are two types of confirmations, positive and negative. Positive asks you to reply in both the cases whether you agree with the information provided or you disagree with the information provided. Negative asks that you respond only when you don't disagree with the information. So that means if the person agrees, the person will not reply. Practically speaking, negative confirmations are not followed, and they should not be followed because they don't give any kind of persuasive evidence. By not getting a reply, I don't know why. I think the standard needs to be reconsidered and see these negative confirmation in the practical environment. Personally, I have not encountered any of the case where I could use the negative confirmation. Yes, positive confirmation can be sent in two ways. One is an open confirmation that without an amount, or it can be a closed one which is with an amount. But negative confirmation, as per my understanding, it is a big no from the practical perspective, and that is why I just don't want to discuss the instances or I should say what the standard has specified certain parameters before we can send negative confirmation. But I have avoided for the purpose of this presentation because I don't advocate on that. I feel positive confirmation should be sent by us. Negative confirmations do not provide us the appropriate evidence for us. What are the steps? Again, determining the information to be confirmed or requested. So what kind of informations can be actually confirmed or requested? That is a matter of professional judgment. I'll tell certain things which can be confirmed. However, it during the course of audit only, considering the materiality, risk involved, and the time involved for for sending the confirmations, following up, and receiving the confirmation, it has to be somewhat auditor's judgment whether to use external confirmation or not. But yes, it is a very important procedure. Then we will select the confirming party. For example, we have a list of trade receivables. The balance is 100 rupees. On the basis of performance materiality or the R materiality, we select samples of around 50 rupees. We send those confirmations of 50 rupees to those parties. And in case there is no response from their side, we are supposed to send them the follow-ups as well. So before we move forward, what are the areas where external confirmation can be sent? So okay, these are only you could say examples. There are other instances as well where it can be sent. I mean, there is a list given in SA 330 as well uh, regarding the circumstances where we can send the external confirmation. So these are just you could say instances where we can send. As per my understanding, practical understanding, bank balances and trade receivables are a must. Bank balances are must for every entity. It should be sent directly to the bank. Possibly, if possible, you can directly visit the bank as well and take the confirmation. Trade receivables, I mean, if it is material and the company or the entity deals a lot in credit, then trade receivable is a must. Trade payables, again, I have seen should be done. Borrowings, title deeds, which are held by the financiers. So nowadays we are supposed to comment on the fact that deeds have been held in the name of the entity or not. But in most of the cases, original title deeds, if the company has obtained a loan, they are not with them. They are with the financiers or the banks. So we should get the confirmation from the banks as well. We should just not assume that since bank has those properties, they have been held in the name of the company. We need to get it confirmed from the banks. Then I have already discussed inventories held by third parties, which have been held by third parties. A confirmation may be sent to them to understand whether the inventory is reconciling with their books or not. Then there may be circumstances, again, extremely rare circumstances, the management might say that, we don't want you to send the confirmation. It generally happens in case of any kind of disputes between the parties. There might be a dispute with a debtor or a creditor. When that happens, we need to actually evaluate that does it increase the risk? A risk may be like potential dispute may lead to outflow of future economic benefits from the company side as well. That if there has been a breach of contract by the company, then they might have to pay certain amount of money to the third party. That is why they are denying. So these are the reasons that we need to evaluate before we can accept not sending that confirmation. If we conclude that okay, your reasons are fine, and in case in a rare circumstance that we agree on that fact, we still have to perform alternate procedures. Alternate procedures may be testing of all the invoices of that party, whether, for example, there has been a sale to a third party, and uh, and there are 10 invoices through which the sale has happened. There has been a dispute about one invoice, and because of that dispute only, the company is stating that we don't want you to send the confirmation. So we can trace that sale from the invoices and the all other supporting documents whether delivery has happened or not. For the one invoice where there is a dispute, we need to assess whether our case is strong enough or whether actually there was an issue with the material which was delivered, and we may have to create a provision for doubtful debts. So that is something we need to make sure if we are going to accept that not sending a confirmation at the request of the management. And finally, if we conclude that we are not able to obtain the sufficient audit evidence, then we might have to modify our audit report as well. Okay, so what happens if in different kind of circumstances if when we send the external confirmation? So two outcomes are possible. One, we receive the confirmation, and the second, we don't. So first step is send the confirmations. I'll take an example of the trade receivables again. We have sent the confirmations. Total balance is 100 rupees of the trade receivables. We have selected parties worth 50. We have sent those confirmations. While we have sent those confirmations, we are not aware whether we will be receiving those confirmations or not, and we can't just wait for the confirmations as well. In those circumstances, we can request the management to ask their debtors to reply. We can send reminders as well. But it might be possible that in very rare circumstances, we get all the confirmations. So in such a case, we need to perform alternate procedures. So let us take an example. Out of those 50 rupees of samples, 30 rupees of confirmations have been received. 20 for 20 rupees, the confirmations are still not there. We have to test all the invoices totaling to those 20 rupees of all those parties to make sure that this particular sale has happened. However, if we have already received 20 rupees before the signing of the audit, balance sheet, then we can avoid testing of sales. So step number one, send the confirmations. Step number two, trace the subsequent collection. And step number three, if the collection has also not happened and the confirmation has not been received, test the entire balances. So that is what an alternate procedure would be for trade receivable. Similar thing would happen for the trade payables, right? And for each different class of transaction or account, for each different account balance, we will have to perform different procedures. For banks, we have alternate procedure that we can ask the client to log into the online banking in front of our eyes, and we can check the balances and take a screenshot of that. But again, I would suggest for banks, it is a must that you obtain the bank confirmation. And if the banks are not responding, you might plan to visit the bank as well, because there is a central banking system, and you can visit the nearby branch and ask the management to someone from the company side to accompany you, and you can take those confirmations. So this is what you can do if the confirmations are not received. Uh, uh, s- in case they are received, there can be three instances. One is they are agreeing to the books of accounts. Second would be they don't agree with the books of accounts, and for example, there are differences. So we need to understand the reason of those differences. One of the reason maybe again that I told you, it can be a dispute or any supply not being accepted either by us or by the customer in case of sales. So we need to understand and whether it is representing a misstatement or not, or whether I need to extend my other procedures, or I can accept it. If the response is unreliable, I mean, a question was asked, I mean, if external confirmation is unreliable, then we need to revise the risk of material misstatement. So in case we conclude that the party is not transparent enough, and they are having certain kind of relationships where they may send a false confirmation, then I may have to see whether there is a fraud risk. Because when fraud risk is there, I have to extend my procedures, and I may have to test all the invoices of that party, or check at the arm's length prices, and you know and even if you are not able to conclude that the account balance is correct, then we might have to take an impact on the audit report as well. So I would like to show certain samples of the confirmations as well, that we can send to the different parties, and also how we can maintain a log or a work paper for those documenting those confirmations. So the first one is a bank confirmation. So this is the first page of the confirmation that will be taken on the letterhead of the client, which will be dated, and the bank address would be there. See, the language which is generally written in compliance with the standard, that in connection with the audit of our financial statement, please provide directly to our auditors. So this is very important, that directly to our auditors. The firm name would be there at the below mentioned address, the information required by them as per the statement attached herewith. So the name of the partner in the firm, I mean, everything would be mentioned, and then your prompt response to this request will be appreciated. Address reply. Paid envelopes are enclosed, so we send it with a small envelope as well in which they can just share the confirmation back to the auditor. Then this is the annexure which is given.
Mayank, if you
This,
can enlarge your screen, that would be better because right now the screen is very small.
no problem. I
Like you
mean,
need to
just
put it on the
let me know.
presentation mode. Yeah,
Just a second.
the screen is not readable actually.
I can understand. Just give me a second.
Yeah.
I hope it is visible now.
Not yet. It is the same as it was. You need to put it on the presentation mode. Then I believe the screen would
No,
be on.
I mean it's a Word document and I have put it on the read mode.
Yeah, it's the PPT only right now. The word is not on the screen right now. You can share the word
Okay,
again,
my
please.
bad. Just give me a second. I hope it is visible now. Okay. So sorry for the confusion. This is what it looks like. I hope it is visible like this as well. So this is the first page, which is to be taken on the letterhead of the client. So in connection with the audit of our financial statements, please provide directly to our auditors. So the important factor is that the confirmation is sent directly to the auditors, that is us, and the address and the information is required to be mentioned over here. We generally send paid envelopes, small envelopes with this confirmation to the clients, to the banks, which they can use to revert us back. And the entire information that is required is sent from the second page. So this is the confirmation that the bank has to send to us. So first was the cover letter, which is signed on the letterhead of the client. And then is the confirmation that is to be shared by the bank. So it is addressed to the partner in the firm. And then it is written that at the request of our clients, we certify the balance and given below particulars of their accounts, investment bills, etc. as at the close of business on balance sheet date. We will specify the balance sheet date as shown by our records. So bank has different kind of accounts. That is why this confirmation has uh, details of all the accounts which are possible with a bank, like current accounts, OD facilities, loan accounts, fixed deposits, investments of the title deeds if they are in their custody. If there is any margin money, or you could say they have issued any kind of guarantees, if they have bills for collection or they have bills discounted, LCs if they are outstanding, or the guarantees. So why there are, if you see, there are certain informations which are particularly uh, not available while we audit the books of accounts, like guarantees if they have been given by the bank. I mean, they might not be readily available unless until they are confirmed by the banks. Although it can be indicated through lien marked FDs or other things, but to ensure the completeness, this confirmation is very important. Then any of the derivatives contracts, if the company has taken forward contracts, if they have taken. And the last they would write, we certify the work particulars are full and correct and do not exclude any other obligations of the company to us. And they will just sign it off. So this is what we receive, and this is something we are supposed to receive directly. Again, if we are not receiving it, then we can send a reminder. And a reminder can be sent in this format. So, dear sir, this is the first reminder. We can send second or third reminders as well, depending upon the importance of the account balance we are looking to get it confirmed. So, in connection with the order of financial, please find attached a copy confirmation request dated. So, we will attach the original copy that we had sent earlier, and we would request them to reply directly to our address. And we can ask them to share the signed copy through email as well. along with the original reply, post it to us. Okay. Now, how will we document all these things? Because ultimately it has to be documented in our work papers. So this is the kind of log that we maintain. This is for bank balance. So for example, we send it to HDFC Bank. We will write HDFC Bank. It is a bank confirmation. The date of the letter needs to be mentioned. When the auditor verified, that date to be mentioned. Then when it was sent, the work paper reference number. In case that has been maintained in a manual file, then manual file details to be given. Then when the first reminder was sent, when did we receive it? What is the work paper reference of the received letter? So we need to obtain the sent and received letter both. Then the file number where we have received the currency. It may happen that the EFC accounts may be there, so the currency we may mention. Then the amount confirmed and the amount as per books of accounts, and if there is any difference between the two. So when I say amount as per books, if there are bank reconciliation items, then obviously the difference would be for the reasons of the bank reco. Then these are certain remarks that you can mention if there are any reconciliations which have been provided by the company for the differences, or or there are any other procedures that we need to perform because of those differences, and finally what we conclude on that. So this is how we document these confirmations. Similarly, we have other confirmations as well. For example, for the accounts receivable, we'll ask the company to issue a cover letter like this: in connection with the audit of our financial statements, please confirm directly to our auditors, Messrs. Whatever the name of the firm is, and then it will be asked to be sent directly to the address of the firm, and the language is standard and similar. And this is the letter that they would send, and they can attach their, we can ask them to attach their own ledger as well if required to be sent to us. So, I mean, this is the sample format that can be actually useful for us. So that is what I had for the presentation. So we had discussed audit evidences in special circumstances like inventory and segment and litigations. How we can obtain those audit evidence in such circumstances. And then we had discussed about external confirmation. I would like to address any of the queries that any of the participants may have. Utsav, I would hand it over to you if you can just let me know if there are any of the queries.
Yes, we do have a few more queries for you.
Yeah, please.
Do you have to save the copies of invoices that we have verified as sample? It is a question.
No, so particularly not. If we have documented in a so documentation is very important. So we need to document each and everything in our work papers. That it may be in the form of an Excel template with the serial number, the invoice number, the amount, the quantity, rate, and the procedures we have performed. If we are able to document that in the form of an Excel and retain that, then we are not supposed to retain the invoices. Invoices are management documents, and at the end of the day, we are supposed to comment upon uh, the evidences which we have obtained to mitigate the risks identified. So, if our work papers are able to demonstrate that we have actually tested those invoices, retaining all the invoices may not be necessary. Just for the sake of sample, you could retain one of the sample that you have tested, just for the understanding of any of the reviewer. That how, otherwise, no need to retain all of them.
The second question is the confirmation from the government departments are not made available. So what do you suggest to obtain the audit evidence in this regard?
See, it depends. I mean, when you are saying government departments, what are you suggesting? I mean, you are suggesting as a
Like in most of the cases, like in PW, like I have a lot of construction clients, so we get the payments from PWD. So even if we send the confirmation to PWD, we never get it.
So I mean, see, again, we have to do the alternate procedures. One, we have sent the confirmation, point number one. Second, for suppose we have received the payment before the balance sheet signing. So that becomes my alternate procedures for that. So as I told, for example, 100 rupees sale has happened, which is outstanding as of the balance sheet date. I have received 50 rupees before the signing of the financial statements or nearby to that. For the remaining 50, I'll have to test all the invoices and understand the basis that whether those invoices have been accepted by the PWD or not. Because as far as government goes, all the things are first accepted by the department, and then only we can think of the collection.
Certainly, certainly.
So
But
those
this also comes
those
with another question in my mind, that there are certain circumstances where the 26 AS does not coincide with your revenues that you have booked as per your books of accounts. So in that case, how do you substantiate the procedure?
pardon me, I mean, what does not
Like the
reconcile?
26 AS, the revenue as per the 26 AS,
Okay, got it. Does
the
not reconcile with
turnover,
the books of account.
yes, it does not reconcile.
See, at the end of the day, 26 AS is does not reconcile because it may be because of the filing issues from the side of the department, or why it would not reconcile.
It would not reconcile because of the filing issues by the parties who have actually deducted the TDS. So it
See,
is a
at the
very practical situation now
but
each and every
my take
professional is
on,
facing, because the department from TIS and AIS is actually
I
picking
understand.
up the turnovers from the point of view of the parties who have actually
I
deducted the
understand.
TDS.
See,
And
I
then
feel
we
it is
have
a.
to file a return
I
again
understand.
in that
I
case.
understand. See, as far as I think of it, it is more of a matter of internal control of the company. That is my take on it. That if we are reconciling the 26 A's on T, and if we are finding any such differences, the company is supposed to communicate with those parties and tell them to revise the returns if they are wrong. And if the company is handling those issues at the end of the financial year, at the time of the balance sheet preparation, there are certain issues with their internal controls. Because at the end of the day, you can't just ask for the correction of the returns at the end of the financial, after the end of the financial year.
No,
Because
but that is the only practical solution everyone is doing nowadays.
see, nothing can happen. See, if we are dependent upon a third person, then it is not practically possible to control everything.
Yeah, certainly.
And if other evidences are there and we are sure of the revenue of the company, then obviously we can document it in a way that the error has happened from the side of the third party and the company's accounts are correct. If they have taken all the actions, that if
Then
they
we
have
have another
sent an email,
question,
right, please.
Mayank,
Yeah.
which says about how to deal with the inventory in transit.
Okay. So see, for inventory in transit also, you can perform a procedure of confirmation from the party. Or you can send a confirmation to them and get it signed from the even the you can get the confirmation from the logistics person as well. I mean, whosoever the carrier is, you can get that confirmation that they were carrying it. And secondly, it is very easy to trace it back once you receive that material. So, for example, it was in transit on 31st, the same was received on 5th. You can review all those documents on 5th, that whether they were actually in transit on 31st, because they would have dispatched on 30, the e-way would have been there and all that stuff. So when they are delivered, you can just trace it back. However, again, whether you have to account for that on 31st March or not depends upon the terms and conditions between you and the party. Whether it was ex-factory or on a delivery basis, then only you will be able to account for whether we have to record on 31st March or not. If the responsibility was for the delivery, then I would not record it.
Then your revenue recognition AS would come to.
Exactly. So all things are interrelated.
Certainly. So with this, I end my questions here. Thank you so much, Mayank, for such a detailed deliberation. You have touched
Thank you
base
so much.
on not just SA 500 and 502, you have also touched base on 501 as well, which was really very much necessary to understand at this point of time. And to summarize it all from the beginning, the audit evidences are the backbones for the chartered accountants nowadays. The procedures which Mayank has explained in details are very much necessary to obtain all those evidences and then to retain them with yourselves to safeguard yourself from any upcoming adversities or any upcoming questions from the revenue departments or the regulatory authorities. Secondly, the confirmations, as Bank has also shown a complete set of document for the confirmation, be it external, internal, that also needs to be retained, maintained. We have seen what happened in the case of PwC and Satyam. So it's very much necessary for all of us to be very much vigilant upon what to rely upon and what to how to get the external confirmations, and who is supposed to get the external confirmation, whether you have to go yourself to take the confirmations, or you can rely upon the letters that you receive. Even after the case where I believe I would like to add upon here that where the negative confirmations are received, the difference in balances are received from the customers, or let's say from the vendors. Then in case also extensive procedures must be applied by the chartered accountants, so that the balance sheet could be turned out at the end to be true and fair, and your opinion can be based on it. For the 26 years, as I had pointed out, from my side, I would like to add upon it, since because I'm also into practice, and this kind of situation we deal every day. So for 26 years, you need to understand if there are credit notes and debit notes at the end of the year, or in the beginning of the year, or wherever they are, and if the same has been adjusted for the purpose of the TDS, and that is why the turnover is not matching. These kind of processes and procedures you can apply, and try to resolve out all the things which are not falling in your court. So with this, I would like to thank Mayank once again for taking out his precious time, and giving this deliberation on the essays. Thank you so very much, Mayank.
Thank you.
This was really insightful. And again, AASB, thank you so very much for again thinking this kind of a seminar is necessary at this point of time. Anilji has been into this complete organization thing from the back. He always pushes us to come over and to talk about the things on the platforms like this. It gives me really a pleasure to always come back and work with him and the learned speakers as well. Thank you so very much. With this,
Thank you so much.
today I end the seminar here. I think we are
Thank
exceeding
you, sir.
our
Thank
time.
you. Thank you, Usarji. Thank you, Mayankji, for such a wonderful deliberation. You have justified. Usarji, can you hear me?
Yes, certainly.
Yes, Mayankji, you have justified with your presentation, and you have covered both these standards in a very, very well-mannered, and hope our participants have gained a very lot through your deliberation and your expertise knowledge. So once again, thank you so much, Mayankji, and thank you so much, Usarji, for adding your expertise and additions towards this deliberation. And from the core of my heart, I thank both the learned speakers for giving their kind presence, for giving their consent for this today's webinar, apart from having the busy schedule and festive season. So thank you so much, both the learned speakers. And I thanks to all the participants of today's webinar, as well as towards both of you, wishing a very, very happy festive season and happy Diwali in advance. Thank you so much, Usarji. Thank you so much, Mayankji. Thank you.